What are central bank digital currencies? What do they mean to you? And will we even see them come to fruition under this current administration? I'm going to answer all those questions in this video, so stay tuned. Welcome to the AlterNate Vantage. My name is Nate. This is where I provide a different perspective on finances, news, and generational wealth. If you like this kind of content, then don't forget to like and subscribe. All right, back to the video. So CBDCs, in my opinion, have four primary components to them, which I'm going to go through in this video one by one. So that way you can kind of see the complete picture as far as what they are and, of course, what they mean for you. So for starters, what we need to understand with central bank digital currencies is that they are centralized. And this is what it means to effectively be centralized based on the definitions provided from the Fed themselves. So the Fed says that central bank money, right, any money that's being issued by the central bank is a liability of the central bank. So currently speaking, just as an example, when you make a deposit at a bank, that deposit becomes a liability for the bank. And so central bank money means you'd be making a deposit at the central bank. So it becomes a liability of the central bank. Because even our current dollars, US dollars, they're all printed by the Fed, but they're not necessarily a liability for everyone who uses them. They kind of act that way in part, but not in whole. So just understand what this term liability means. It means where you hold the deposit. So this means or assumes that we'd be holding the deposit with the central bank. Instead of like, Bank of America or Chase, the deposit is with the central bank. They go on to say a CBDC would differ from existing digital money, for example, like Bitcoin and things like that, or stable coins, because a CBDC would be a liability of the Federal Reserve, not of a commercial bank. So they're highlighting the fact that everything that has to do with this currency is both issued by the central bank and it's held by the central bank. It's one central location. Right now, our monetary system is technically diversified because even though we have Federal Reserve banks, we have banks that are part of the Federal Reserve branches. They're not technically part of our central bank, which is the Federal Reserve, which is why we have Bank of America, Chase, Wells Fargo, all these different banks. But under a CBDC, everything is centralized. Okay, that's the first part. Now let's see, going on to the second part here. So we covered centralized. Now let's talk about the fact that they are digital, which isn't too hard to understand, but there's a couple different components here that I think we need to look at. So a central bank digital currency is digitized by essentially creating a digital representation of traditional fiat currency. So in our fiat currency system, that's paper money that's not backed by anything besides good faith, right? Besides, a high work ethic, if you want to put it that way. So it's not necessarily anything real. A central bank digital currency is the same thing. It's just that you've minimized it now to ones and zeros. So instead of having the option of transacting in cash, you don't have that option anymore because everything is digital. Now, the central bank digital currency is managed by a central bank's ledger, and they utilize blockchain technology to record transactions. And the central bank issues digital coins that can be used for transactions online or through mobile devices. You can think of this, how they operate digitally, as being very similar to cryptocurrencies, but it's a currency completely owned and controlled by the central bank. Once again, the centralized aspect to it. They can approve transactions and disapprove transactions automatically, which might sound like a good thing or might sound like a bad thing, depending on who you're talking to. And a very similar, I should say, close equivalent to where we're at right now with this is, for example, in the EU, they have a digital wallet that they're launching this year. Because they want to digitize your identities in other aspects to, who you are, your government benefits, your veterans benefits, your insurance cards, your everything, right? Your driver's license. Everything's going to be digital. And so they're doing the same thing with money. That's the second thing. Now, thirdly, they are programmable, which is the most interesting and also the most terrifying. And here's why. Understand that programmability refers to the capability of software or hardware to execute externally defined processing algorithms. So you essentially set up a sequence of if this, then that, right? It's a sequence of if this happens, then this will happen, and then that will happen based on your inputs. So your inputs determine your outputs. If you have an input that's negative or not very, it's not positive in terms of how they define it, then you're going to have a negative output because you put in a negative input. And the only reason, or the only way this is accomplishable is because they're operating under a common executable language, which is under ISO 20022, which you've maybe seen, probably haven't, but this is essentially the entire framework for all messages that's going to and fro all banks across the world. They're migrating from old historic Swift systems and moving into the ISO 20022 language, which unifies how everyone talks together. So the significance of that is if you want to have programmability within a currency, that means you all need to be operating under the same system. It's like trying to, use Java as opposed to another programming system, right? So you need to have them all talking in the same language, and ISO 20022 does exactly that. But I don't want you to take my word for it when it comes to what's taking place right now in the markets, because the people who are creating the systems talk about it themselves, and I want you to hear it for yourself. For example, this is the general manager for the Bank of International Settlements. His name's Augustine, and here's what he has to say in regards to central bank digital currencies. Check this out.
Our analysis on CBDC, in particular for the use of general use, we tend to establish the equivalence with cash, and there is a huge difference there. For example, in cash, we don't know, for example, who's using a $100 bill today. We don't know who is using a 1,000 peso bill today. A key difference with the CBDC is that central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability, and also we will have the technology to enforce that. Those two issues are extremely important, and that makes a huge difference with respect to what cash is.
Okay, so hopefully you caught that. He's admitting himself they'll have absolute control over the currency and who's using it and knowing exactly when they're using it. Once again, this is Augustine right here, general manager for the Bank of International Settlements, and this is the Bo Lee, who is the deputy managing director of the International Monetary Fund. So the two largest organizations that have a lot of sway over our financial system, this is what they're talking about when they are discussing CBDCs. Check out Bo Lee.
The third way we think CBDC can improve financial inclusion is through what we call programmability. That is, CBDC can allow government agencies and private sector players to program, to create smart contracts, to allow targeted policy functions. For example, welfare payment. For example, consumption coupon. For example, food stamp. By programming CBDC, those money can be precisely targeted for what kind of people can own and what kind of use this money can be utilized, for example, for food. So this potential programmability can help government agencies.
Okay, hopefully you get the point. They're really not trying to sugarcoat anything here when it comes to who owns it, who controls it, and what you can even spend it on. Hopefully you caught that in some of his statements there. So let me move on to the last section here of what constitutes a CBDC, which I think is probably the most important. The last one is the fact that you're going to have no ownership over it, and there's going to be no privacy ascribed to it. And it's easiest to understand this when you look at it in comparison to our current banking system. And so this is how I kind of like to describe it, and this is just in my own words here. Okay, so and you can do this on research as well. I'm just letting you know this is how I describe it. Under the current banking system, depositors are considered unsecured creditors. If you want to look at your banking records, your fine line documents, which I have personally pulled mine, and I used an AI system to scrub all of the entirety of the PDF, and it did indeed define me as an unsecured creditor. You can look it up yourself, highly encourage it. This means that depositors are crediting the bank with cash, and the bank then owes this money back to the depositor at an undefined date. For example, your checking account is considered a demand deposit because you can withdraw it or call it back on demand. In practice, the bank is a debtor because you are crediting them, and the depositor, us, we put the money at the bank, is a creditor, right? But we're not requiring any form of collateral from the bank or any promises from the bank, which is why we're considered unsecured. So we're an unsecured creditor. Think of it like a real estate transaction. If you have a bank loaning you money to buy a house, that bank is secured because if you default on the loan, then the bank gets the house. That's how it works. So in short, you own it. The money that's in the bank, you own it. You've credited them. You own it, but the bank controls it, right? That's the key difference under our current system. Now with the CBDC, the relationship is switched. And even though they said, for example, over here that the central bank money is a liability of the central bank, that's somewhat true and somewhat untrue. And it has to do with the fact that we're using digital wallets. Because when you have your own digital wallet, you effectively become your own non-bank financial institution. And when that happens, the centralized authority issues you the money, right? They issue you the money to your digital wallet. So they're crediting you. You become the liability, or I should say, you are then holding the liability. So relationship is switched from talking about CBDCs. The central bank will credit the digital wallet holder, you. So that means you become the debtor. The central bank will credit you with the CBDC. The wallet holder is then free to use that CBDC so long as it fits within the confines of the rules that they have already established, their programmability. And since all transactions are digital, everything the user does will be visible on the blockchain. There's going to be some privacy in terms of person to person, but the owning entity over your wallet is going to have complete access to see everything that you're doing, good, bad, or indifferent. So instead of you owning it and the bank controlling it, you don't own it and you actually have limited control over it because you can't, for example, withdraw cash and then do whatever you want with the cash. You're stuck within a blockchain system. So this takes our debt-based system to a whole different level. It radicalizes it to the 10th degree. And the accumulation of wealth will be drastically harder to achieve. Okay, so you might be thinking, yeah, great, CBDCs, maybe you love them, maybe you hate them, maybe you see them as the fulfillment of the beast system, whatever you want to look at it as. Personally, in my view, they is nothing but absolutely detrimental when it comes to just the freedoms of financial liberties, right? It's a completely locked down system. If they don't want you looking left, that you can't go to the left kind of deal. So I definitely don't appreciate them. But then we have this rhetoric that's going on right now to say, well, Trump, he's coming in. He was just elected under this current administration. He's doing away with CBDCs. And you're technically correct. You can look at a recent executive order that he posted. And he actually said, executive order, I think it's 14067, has been revoked. This is an order that Biden had previously signed for the research and development of central bank digital currencies. And he's even said himself, he's not for the creation of central bank digital currencies. He doesn't want to do that at all. And yet, he is promoting for the development and inclusion of stablecoins. And you might be thinking, well, stablecoins are different from central bank digital currencies. Yes, but at the end of the day, they are a technological stepping stone to get there. Right now, we have a lot of things swinging to the conservative side in terms of, the public notions and how we think about things and how we look at things. But you need to understand that if we have a stable coin, stable, which is used ironically, in my opinion, what all they're doing is they're transitioning what we're holding in cash, what we're holding in demand deposits, and now we're putting that behind a stable coin, which is completely digitized. It's being issued by a centralized authority, and it's managed by a blockchain, and it's not private. You don't own it, and you have limited control over it. It's like it almost functions exactly like a CBDC does, but it just has a different label. So that's my point when I say that it doesn't matter if it's CBDC or a stablecoin, the result is exactly the same. Well, what this means for you is that you need to have vehicles established in your financial life to ensure that as this transitioning is progressing through, that you'll retain the value of your buying power so you can continue to acquire cash flowing assets. A lot of people don't know how to do that. They don't understand the structures and the vehicles behind putting those systems in place. That's exactly why I have this channel, so I can discuss what I'm doing in this space to make sure I am prepared through this transition, because it is coming whether you like it or not. There's just too much momentum behind it. So if you want to learn more about what I'm doing, how I'm doing it, please like and subscribe, follow the channel. I'll be posting more videos in the future as far as exactly what I'm doing. So if you want to copy me, you're more than welcome. But with that, I'll catch you in the next one.